Yo, what's going on guys? Welcome back to another video at TraderJourney here on YouTube. Thanks very much for joining me on yet another video. This video will be dedicated to the beginners, for anyone starting out with options trading. I'll be talking you through how to buy a contract, what to look out for, and I'll mainly be showing this on TASTYWORKS. So for anyone who's starting out on TASTYWORKS, this will be particularly helpful. I'm getting a lot of questions on my social media and on YouTube just surrounding the fact that not many people are aware of how to use the platform and how to select a contract, what contract to buy, and everything that comes with that, and in fact also with selling a contract as well. So I'm just going to quickly go over that for you guys, so I hope you find this really helpful. If anyone's new to this channel or this video, make sure you hit the subscribe button, drop a like as it does help me out, and let's get straight into this video. So as you can see here guys, I do have TASTYWORKS up here now. What I'm actually showing you here is the actual selection of your contracts by week. So you can see there's a selection of different contracts you can actually trade all the way up until December 15th 2023. So this is what you'll be presented with. If for instance you selected SPY in the top left search bar, this is what you would be presented with. You can pick any stock you want here. Let's try another one of my favorites, AMD for instance. It will pull up AMD. So you simply put the ticker of the stock here in this search bar in the top left. It will come up with the range of contracts which are available for you to buy. So for this particular example, I will show you SPYs. It's just an easy one to look at. You do obviously have several weeks, months and leaps of contracts here available for you to buy. It's very easy to use. TASTYWORKS is probably one of the most user-friendly platforms I've ever used, so I'm hoping you guys will find that once you've seen this video and give it a go yourself, you'll be able to see how straightforward it is. So you'll notice there's a lot of different sort of tools that you could use on TASTYWORKS, but I'm going to stick to the basics to make it as easy as possible for you guys to use. Now once you select the stock or the ETF or whatever you'd like to trade in the top left of the search bar, you'll then see just below it there's a sort of way in which you can view the contracts. There's a table version, a curve version, which you can see by just selecting curve. Curve is quite good for anyone trying to visualize what's happening with the contract and what they're expecting to do. You can see this this sort of graph here. It's a normal distribution graph, which for anyone's sort of anyone studied maths or any advanced level maths would probably know what this sort of thing is representing. The middle is straight down the strike price of the particular stock or ETF you're looking at, and there's obviously different ways you can look at the contract, but for me, I just stick to table. It's the easiest way, and the easiest way to pick a contract and select it and buy it. So for me, for any beginner, I would highly recommend using the table version, and if you want to see a visual of the contract, you can select curve and see what's going on here. So when you're presented with this list of different weeklies, monthlies, quarters and leaps, you would simply select the drop down list, and you'll be able to present yourself with all the contracts by strike price, and this is how you go about selecting your contract. So now moving on, you'll see straight down the middle is the strike price. Now your strike price is again, I've got a lot of questions on what a strike price is. Strike price is the price at which the stock is. So this represents what the stock value is. So right now SPY is trading at 369.18. So as you can see, this orange line presents at the money. You probably won't be able to see it here, but just above the orange line it says ITM, which stands for in the money. So the strike price at the moment, so the current stock price of SPY is 369.18. so you can see the orange line represents at the money. Now so your strike is essentially the value of the stock. So depending on whether you want to go in the money, you would go below the stock price. If you want to go out of the money, you would go above the stock price. Now that is purely if you're going long on the stock. If you're going short and you're placing some puts, then it would be the opposite. So in the money would be prices above the current stock value, and out the money would be anything below the current stock value. So that's if you're going for puts. If you're going calls, it's simply the opposite. The orange line and the arrow and the ITM here represents that, and perfectly annotates what exactly this is showing. So that's your strike price, which is straight down the middle, and then to your left you'll have your calls, and to the right you'll have your puts. You'll notice, guys, if you are using different platforms, this contract sheet will generally be the same, which shows all the breakdowns of your contracts and different contracts you can be buying. This screen should be the same on nearly every platform. Every platform I've used will show this contract list. So once you've selected the strike price you want to be trading at, if you're confused as to what strike price to select and how to go about that, I'll make a complete separate video on this, but this video is purely how to select and buy a contract and even sell it. So once you've selected the strike price you want to be trading at, you will then look to your left. Now you can alter these columns to suit what you would want, but for me and the way and my style of trading, delta is probably one of the most important of the Greeks, and volume, and I'll also be looking at open interest. So I do tend to change these quite a bit, but I'll be making another separate video on the Greeks for you guys to understand that. But deltas for me, and that essentially will show you for every dollar in the move of this underlying stock value, how much will your contract price move by. So if you bought a contract at say 360 and it went to 361, you should expect your contract price to go up by 94 cents. And keep in mind that's by 100. Every contract represents 100 shares, so that would be $94. So yeah, I mean, that's quite a simple one to understand. So for whatever contract you bought a call contract at 370, you're expecting the stock price to go to 375. So $5 times by 53 is essentially what the contract price would go up as, and that kind of gets you an idea of what profit you'll be looking at if your particular move actually occurs and happens in the way you expected. It gives you a gauge of what profit to expect. So I don't look at it too much, but you obviously want to be trading a contract which has a relatively good delta. And what you'll also notice here, there's a bid price and an ask price. Now a lot of people get confused. Do you buy it at the ask? Do you buy it at the bid? Now if you're buying a contract, you simply select ask. Now what I generally do when I'm options trading is I'll go somewhere down the middle. So I'll show you an example of that shortly as I almost pretend to buy a contract. You'll be able to see what the next screen shows and what I tend to do before placing the order for the contract. Now the other thing which I find quite interesting is looking at the volume. It's one of the key sort of areas I look at, but I look at open interest, I look at implied volatility, I look at so many other things, but this just shows you 4 columns at a time, unfortunately. So you'll just have to keep selecting different ones if you're assessing a trade. But yeah, as you can see at the money, there's majority of the volume and purchases are going through at the money. So 73,000 contracts at the money. So it just gives you a gauge again of what's happening in the market. And I mean, you can see for SPY, for instance, there's definitely more call contracts at the moment. Call contracts at the money at 73,000 compared to 61,000 puts at the money. So you can tell it's a really good way of gauging what the market is and what the sentiment is for the market, because as of now you can tell that most people are thinking that the market is bullish compared to 61,000 people who are thinking the market is bearish. So there's 61,000 contracts there of volume at puts and 73,000 at calls. So another way of just gauging the contract in which you're looking to buy. But it's nice to go down and see what's happening. You can see there's one contract, a couple of contracts, 13, but most of the volume will be obviously at the money. So another interesting thing. So moving on, guys. So like I said, if you're buying a contract, whether it be calls or puts, you want to be hitting the ask price. You don't want to be selecting the bid price. You want to be hitting the ask price. So I'm going to go ahead and show you an example of buying a call contract at 370, and I'm going to simply hit the ask price, and then boom, you're presented with this screen. So this is how easy they make it. You simply select, hit the ask price, and then you come up with a purchase order screen to fill the contract order. And as you can see here at the bottom, you'll see there's a green icon and a sort of range. Now this range is essentially the bid and the ask price, which we previously saw in these columns. And what I like to do is generally I like to go straight down the middle. A lot of people tend to go sometimes forget this whole point and they just go straight at the ask. But I'll explain in a short while why some people go at the ask and why some people go down the middle. So I generally, when I'm placing my trades, I'll go straight down the middle. I don't go at ask, I don't go at bid, but there's only few scenarios and few occasions where I hit the ask price, and I'll explain that now. So if, for instance, I'm scalping, which I rarely do at this point, that's not really my trading strategy, but if, for instance, I am scalping and there's a lot of volume being flooded in the market, the stock price is surging or it's crashing, and you just want to catch the move. If you're really desperate to catch the move, it's very rare, if there's a really quick move happening, it's very rare that you'll be able to get an order filled straight at the middle of bid and ask. The reason being is there's so much volume going through the order, so you'll have to place the order at the ask price. Now, if you're going to, so by hitting the ask price and paying for the contract at the ask price, you'll be able to get your order filled straight away. And I've noticed that from previous experience. So if you're chasing a move, you want to catch the move, you hit the ask price, and it's as simple as that. But if you want to save some time, you're not so urgent to get into the position, you can go straight down the middle, which is 99% of the time is what I do, and you're getting a fair price for the contract. So yeah, I'd simply select these arrows here depending on how close to the range you want to go. Now what you'll notice is if a move is happening really quickly, this will flicker really quick. The bid and ask prices will change. So you'll have to be a sniper essentially and quickly move the price to where you want it. Do you want to hit it at the ask? Do you want to hit it down the middle? And then quickly click review and send, and I'll show you that in a short while. Now some other pretty handy tools for what I use is, if you don't want to cancel this particular contract and say you had a change of mind and you want to buy further out the money or in the money, there's some arrows here to the left. Just moving my mouse so you can see that. You can go down the strike price, simple as that. You don't have to cancel the contract and place another order, which wastes time. You can just simply click this movement of strike price, select the strike price you want, and there you go, you've hit a new position. So that's very handy to have. One of the other things you can do, which I generally use a lot, is if I'm going heavy in a particular move, I want to size up on the contract. So say I want to buy 4 contracts. You can simply move the quantity here, which is very handy. Instead of placing several individual orders, you can just order the quantity you want. So right now it's illustrated here on the green bar. So it says B1, which basically stands for buy 1. If you go up in quantity, it'll go buy 6, buy 7. So right now buying 7. So it's as easy as that. If you want to size up on a position, which is really handy, you can even alter your expiration date. So right now we're looking at 21st December. You can increase the time and go to the next week's. But keep in mind, we're looking at SPY. So SPY expires on Wednesdays and Fridays. So 21st, which will be next Wednesday, and then 23rd, which will be the Friday. But you'll notice if you're looking at other contracts, which are mainly weeklies, which expire on Fridays, once you click this time, it will go to the next week and the next week, which is pretty easy, hopefully easy for you guys to understand. Now, one of the other things is there's a swap icon. So I very rarely use this unless I've accidentally selected the wrong thing. If I wanted to sell a contract to the buy, this basically just flicks it over, which is pretty handy. But I rarely have to use it because usually I'm looking at the correct side and correct contract I want to buy. And again, there's some undo buttons, which again I rarely use. I just alter it from here. But if you're worried of what you've changed, you can always undo what you've done for this order screen. And again, there's so many other sort of variables here. A lot of people ask, oh, what order type do I pick? Stop, limit, stop, market. Now, for me, I always order a limit order. That's basically because when I'm so confident, I only place high probability trades. I set a mental stop loss, but I definitely do not recommend that for any beginner trader. You always should set your stop loss. But I'll show you a way that I do it, which is probably a bit easier. So I'll always set a limit order. You never want to be selecting a market order. The reason why, I do know a few people that select market orders, but you will be getting a very, very high, you'll be paying way over the odds of the bid and ask. You'll just be paying whatever someone's willing to sell it in the market. And you could be, say right now the ask price is 1.67. if you hit market, there's a chance you could be buying a contract for 2.00, and you don't want to be doing that because that will cut your profit margins and you'll likely not make any money. If you're making, I just don't use market orders at all. I don't really know many people that do, so I always stick to limit orders, because limit orders, what that means is whatever price you select here, that is the price you pay. You will not pay any less, you will not pay any more. You will just pay the price which you select here. That is why it's important for me. I always select limit orders, because I don't want to be paying whatever the market rate is. I want to be setting a price for the contract I want to pay, and pay that exact amount. I don't want it any less or any more. I just want to know the amount I'm going to pay before I pay it. If you selected market order, who knows what price you're going to pay? It just depends on the market. Whoever's selling that contract, it will be the first to fill it, and you may get a price you don't want. So I'd avoid market orders, especially for any beginners out there. So, I mean, you could select, if for any beginners who don't want to set a mental stop loss and want to actually set their stop loss before the order, you want to be doing a stop limit. A stop limit is great, and you set your stop loss there and there, here and there, and you just make sure it helps you be strict with your stop loss, because when you place a limit order without any stop loss and you just go for it, what might happen is your emotions come into play. And I mentioned that this time and time again on previous videos on my Instagram. Don't let your emotions affect your trading, and this will be the perfect way of you avoiding your emotions coming in. So if you set the limit order, you set your stop price. If the order just doesn't, so you say your order places and the trade goes against you, your stop price will hit and you're out of the trade. Your emotions are completely left at the table, and you won't need to get involved with any of that. So for any beginner traders, highly recommend that you simply select the prices, the stop price, select the limit price of what you're looking to buy it at, and the stop out price. So I mean, that's as simple as that, guys. And it's pretty easy to use. Like I said, I don't really mess around with this. I always stick with day. So yeah, I mean, that covers off this sort of order screen. And stock market, I mean, if you're like I said, not many people do this, but if you're really rushing to get in a trade, set your stop price, you're placing a order at a market price. You could also do that, but I do not recommend that at all. So I'd avoid that. So say for instance, you went with a simple limit order. You saw a move happening, you saw a breakout, you want to jump in. You simply select the contract, like I said, you go down the mid price, click review and send, boom, you're presented with this screen. Now this screen here is obviously pretty straightforward. There's not much involved here. It just gives you an overview of the contract. Now as you can see, the contract, the trade price is 165. The reason being is it's always times by 100. Like I said, every contract is by 100 shares. So the price you're seeing, you would always simply times that by 100 for the actual trade cost. And after the screen, as soon as you select send order, boom, it's done, it's clear, it's gone. And what will then happen is you will see that order enter your positions tab, and it will say working. Now I'll be showing you some live trades next week, so stay tuned for that. But for now, it's obviously there's no positions. This is one of the new accounts to set up the challenge that I've got on my Instagram. So you'll see a waiting. As soon as the order gets filled, it'll come up with a sort of alert screen saying order filled. And once the order is filled, you're in the position. You can then track the position, see what's happening, and take it from there. So that's as easy, that's as simple as it gets, guys, and it doesn't get any more difficult than that. Now, say you're in the position, you hit your profit target, you're ready to sell the contract and come out of the trade. You would see in your positions that the order has been filled. What you can simply do, again, I will be showing you this next week, but say the order is filled, you'd simply right click on the order and it will say close position. You simply click close position and you'll get to an order screen, and you simply go through the same process as what we did with buying the contract, but instead you're selling it. But for me, it's an easier way rather than going into this contract list, find the contract and sell the exact contract which you bought. It's much easier to select positions, find the order, right click, close position, sell the order, and boom, your position's done. You've locked in your profits and you're out of the trade. So I hope that makes sense to you guys. I don't want to make this such a long video. It's a very easy way of learning. There shouldn't be anything difficult. If you have any questions, let me know in the comments. Let me know on Instagram. Feel free to DM me there. And just another thing before I finish off the video, I do not use TASTYWORKS for any of my technical analysis. The charts, a lot of people know in the trading community, the charts are not great in TASTYWORKS, so I stay away from it. But I use TradingView for all my charting, technical analysis. I do buy the premium version of TradingView, but it allows you access to all the indicators you want to use when trading. So I really hope you enjoyed this video. I hope it makes sense. If anyone's got any questions, like I said, let me know in the comments. And just before I end it here, make sure you hit the subscribe button if you did get some value from this video. Do also drop me a like, as it does help the channel out. And I shall catch you all on the next video. Thanks so much for watching. Take care. Goodbye.